Stocks bounce after a weak open with mid-caps leading the charge. IT and metals are prominent gainers. Financials are off the lows while utilities are the big drags. Bajaj Finance gains after the lender says that credit costs have peaked in the second quarter and will moderate going forward. Even though the rise in the Q2 pushes up the full year guidance, its business momentum remains strong. Gujarat Fluorochemicals' EV materials arm raises 1,000 crore rupees from its promoters and prominent family offices at a valuation of 25,000 crore rupees. The raise precedes another round planned before the end of the fiscal year that will help it ramp up operations to $1.5 billion by FY27. Paytm owner 197 Communications gets NPCI's not to onboard UPI customers 9 months after the RBI barred it from acquiring new users. The move comes as a fillip for the payments-led platform. The stock is up 10%. The IMF sees India's growth slowing after a 2-year strong run fueled by accumulated pandemic demand which has been exhausted. It now expects growth in FY30 to be 6.5%, the same as in FY25. Good afternoon, you're watching Halftime Report here on CNBC-TV18. I'm Hormas Patakia, with me is Mangalam Malu, and finally some green on the screen after the sell-off that we have seen over the last two trading sessions. The Nifty is finally seeing some bit of recovery after the lows that we saw over Monday and Tuesday. Above the levels of 24,500 is where the Nifty is. The Nifty Bank too is participating in this recovery with healthy gains as of now, but it was participating actually. The Nifty is now nearing that mark of 24,600. The Nifty Bank slightly in the red though in today's trading session, but what is leading the gains is Nifty IT. Now it's up 3% now, and the surge in the IT index but predominantly led by mid-cap IT names. Mangalam, good afternoon.
Good afternoon. You know, the Nifty Bank has been fairly volatile over the last few trading sessions. If you look at it, the day before yesterday, it was held high only by HDFC Bank. Yesterday, it was ICICI Bank. And today, if you look at it, both of them are seeing some bit of a sell-off. ICICI Bank is among the top contributors on the way down. In absence of the Nifty Bank performing and in the presence of the Nifty IT index doing extremely well, we have the Nifty which is holding with minor gains. However, the bigger positive today is after a 5% cut on the mid-cap index in the last two trading sessions, the mid-cap index has tried to bounce back a little more from the lows. So the mid-cap index currently is sitting with a gain of almost 1%, and 1,700 stocks advancing for about 700 stocks which are declining. The important part would be where it goes from here, because for the last few trading sessions, there have been a fair amount of volatile moves in the market. Do we go into tomorrow's trading session with an upward momentum, or do we see some sell-off in the second half of trade is something that we will monitor. But a lot of earnings to contend with. Earnings to contend with indeed, and we'll keep an eye out on the market, of course, as the day goes by. But Ugro Capital is on our radar on the back of its second quarter results. Disbursements grew by 7% on a sequential basis, but declined 21% on a year-on-year basis. The company also saw an uptick in the net income and net profit, both on a sequential and a year-on-year basis. To discuss more on this and the outlook going forward, Sachindra Nath, the founder and MD of Ugro Capital, is joining us on the show. Mr. Nath, good afternoon. Thank you so much for joining in. I'd like to start off by asking you, because the prime part of your business is the robust the disbursals, and what is your outlook going forward there? Your disbursals were up on a sequential basis, but on a year-on-year basis, the number is slightly lower. How do you see that going forward in the second half of the year?
So I'm sorry, we had our lifetime highest disbursement in this quarter. So I don't know where you're picking up the data. So we did 1,971 crore of disbursement in this quarter, which since we started the company in mid of 2018, this is our first and highest quarter disbursement. And we believe this is a result of the very strong base of distribution which we are continuously building. The micro enterprises branch rollout is happening. We are now at 210 plus location. We'll be at 250 location this year and 400 location next year. We continue to believe that, I think so we will continue to maintain the momentum. It is also, as you know, NBFC as a segment of the market, regulatory narrative is pretty negative. But, we are getting, because we are a dedicated MSME financer, we are benefiting from the constraint which is being put on consumer financing, personal loans, so on and so forth. So I think so our long-term target is to be India's largest small business financing company, and we are on that path. This quarter, actually, we had seen real momentum in our micro enterprises segment, our prime segment, machinery. All of our engine fired. Our liability engine was very, very strong, and we were able to maintain the credit cost.
All right, that's interesting. You're able to maintain the credit cost as well, because this at a time when a lot of the other NBFC peers are speaking about some sort of stress in the credit situation right now. If you could give us a sense on how that is likely to pan out, credit cost guidance for this year, along with guidance on the net interest margins as well, because going forward, two trends are looking imminent. One, the cost of funds increasing, and the second one is, of course, the credit costs or the credit quality showing signs of some sort of stress. If you could give us a sense on that.
Yeah, so my request to people like you who actually build this narrative into the market is to segregate and differentiate different type of different segment of the market. We run this campaign called MSME Acha Hai. We do publish a report which is along with DNB every 6 months. What we are seeing that this narrative that there is a credit cost or there is a ballooning of assets is happening is more, even if you look at RBI commentary, it is more driven for retail credit, and retail credit means consumer, personal loan, and microfinance institution. MSME is a segment of the market, especially the bottom of the pyramid, which we call 15 lakh turnover to 4 crore or 3-4 crore turnover small businesses. We are seeing very robust, cash flow generation happening to small businesses. And that's why we think so that MSME in this, next 3 to 5 years would be a mainline activity, and there is an opportunity to build a mainline financial institution. So this, this clubbing of overall NBFC scenario, microfinance, housing finance, consumer finance to MSME, time has come there wherein, we segregate MSME financing in India separately to the rest of the NBFC pack.
Mr. Nath, your provisions have increased on a sequential basis. I wanted to ask you what led to that increase in provisioning, what demanded that, and which is the sector within your business that demanded that excess provisioning?
No, actually, look, if you look at our guidance, we have said 5 things. We have said that Ugro is targeting to achieve a 4% return on asset and 18% return of equity by end of 26. And that is a function of OPEX leverage, portfolio yield going up, a little bit of contraction in our cost of borrowing. And we have said that our credit cost on a steady state basis should be at 2%, which was roughly around 1.5%. So as the maturity of the portfolio and as the growth would come, the total credit cost and provisioning would get to that level. The way we design the business is by product line. So we have a prime secured business, we have micro enterprise business, we have machinery and green financing business, we have embedded financing and retail merchant financing business. As the portfolio matures, you have to take more provisioning in line with the anticipated credit cost. So this is sheer function of our scale, size, and maturity of the portfolio. We continue to believe that our gross NPA, on a steady state basis, will remain at around 2.5%, and our credit cost all through the cycle would remain around 2%.
All right. Just to way back on the margin front, I wanted to know 2 particular things. One, how much of your NIM expansion this time around was on account of lower cost of funds, and how much of that was on account of increasing yields? If you could break that up for us. And as, central banks world over, including at some point the RBI, looks at reducing interest rates, what would your NIM targets be?
Yeah, so look, we have said that our portfolio yield in next 6 to 8 quarters would go up by 150 basis points. This increase of 150 basis points is happening because our micro enterprise business, which is loans below 25 lakh rupees, which are originated through our branch network, whose contribution was 10% of AUM, would go up to 35% of AUM by 2026. And because that engine generates secured loan in the tune of 18 to 19%, the portfolio yield would increase by 150 basis points. We have then said that we will have a 75 basis point of cost of borrowing reduction, of which we believe that around 50 basis point would happen because of maturity of the business. We have got 2 rating upgrades. We have raised around 1,265 crores of capital. So in sequential year from now, the more profitability which is coming into our business, rating upgrade and maturity would bring around 50 basis of cost benefit. We are not seeing that right now because liability market had remained constrained for NBFC, not for us per se. And around 25 basis point we have presumed in either in Q4 or Q1 of next financial year to start happening because of the rate cycle changing from now.
All right, Mr. Nath, thank you so much for sparing time and taking us through the quarter gone by and the road ahead as well for Ugro Capital. Wish you good luck for the second half of the financial year. That was the management of Ugro Capital, the stock trading with gains of just around 1%. Now, as we slip into a break, here's some good news. 1 million Indians are now making smarter investments with the help of Money Control Pro. Money Control Pro, which is part of the listed entity Network 18, has crossed the milestone of 1 million paying subscribers. The site closed September at over 53 million unique visitors, nearly 30% higher than its closest competitor, ET, underlining the fact that Money Control Pro is India's platform of choice when it comes to making financial decisions. If you haven't subscribed yet, scan the barcode on your screen to become a part of the Money Control Pro family and help yourself make better financial decisions.
All right, Money Control also celebrated their 1 million subscriber landmark this morning by ringing the opening bell at nowhere but the National Stock Exchange. The editorial team of Money Control was also joined by India's leading investors, market minds and movers and shakers, including Ashish Chauhan, the MD and CEO of the National Stock Exchange, Sameer Arora from Helios Capital and Edelweiss's Rashesh Shah for a special chat on the power of Indian equities.
Welcome back to Halftime Report. Time for an exclusive chat now. Macquarie Asset Management, the largest infrastructure investor in the world with an AUM size of $600 billion, has invested in 60 plus assets in India at present, which span across sectors. Prashant Nair caught up with Ben Way, the group head of Macquarie Asset Management, and discussed about their India investing journey. He began by asking about the key lessons learned from their investing journey in the country. Listen into a slice of that conversation.
Some of the lessons we've learned are, really important to have local partnerships and people on the ground who can really navigate relationships, regulation, and understand from a bottom-up point of view what the right sectors are to invest. I think the second thing is, patience and tenacity. India is not a linear style market. It has cycles. It's constantly evolving, and so you've got to really demonstrate that you understand the market there and you're there for the long term. I think thirdly, we've learned a lot of things along the way because the market's evolved and any good investor is always evolving with the market. So originally when we came into the market, we did a lot of joint ventures or we took minority positions. And as we grew and understood the market more, we moved into more majority control positions where we can really bring our global expertise and capital and match it with the opportunity here in India. So we're incredibly positive given the macro and secular tailwinds in India about investing here and really looking to build on the experience we've had to date.
From a listed universe perspective, when we talk about infrastructure, it's largely power, roads, highways, that kind of thing. But tell us, which are the areas you are most bullish about from the infrastructure space from an investment point of view?
Well, I think the big global thematics that I think people are really focused on at the moment have to either do with energy transition or to do with transport or to do with digitalization. And I think those big global thematics are reflected as the biggest thematics here in India. And certainly our experience has been that those sorts of thematics are generally the building blocks of nation building and of economies and really creating inclusive growing economies. And so I think when we think about India, we too still think about roads and airports. We think about energy, both traditional, but increasingly around energy transition. And energy transition is it's a broad universe, everything from core renewables like wind or solar right through to battery storage, green ammonia, green hydrogen. So we see a huge potential there. And it's really amazing, to be honest, what India is doing around energy transition. And I don't think it gets enough credit for the strides it's making. And then lastly, obviously, things like digitalization. And one of the biggest thematics for us has been things like data centers. We're one of the largest owners and operators of data centers around the world. We have more than 9 platforms today covering geographies from Asia Pacific through to Europe into the Americas. And we see that as a real opportunity here as well. So I think, India, because of its population size, because of the robust growth of the economy, and because of a very supportive policy backdrop, means that those global thematics are here, but in many ways, they're here turbocharged.
With regards to data centers, any projections you have? Because I mean, I think in terms of data center capacity, it's pretty small. I think about 1,500, 1,700 megawatts, but there's room to grow. Could you give us a sense of what your expectations are from that space for India?
Yeah, so every data center projection we've ever made, we've got wrong. And that's because a little bit like smartphones 20 years ago, I think everyone struggled to frame just the revolution of the smartphone and convergence. And I think we're doing the same thing here with data centers. So I don't know exactly how big data centers is going to be here in India. What I do know is that the growth will be sort of, many-fold over many years to come. And that's just driven by the underlying digitalization, obviously, of the economy, but also things like AI that are generating a big drive. And the thing that I sort of reflect on is, I think India is at a really interesting point in terms of where you see that crossover between urbanization and innovation and entrepreneurialism, and that's going to create a whole range of new businesses. And a lot of those businesses are obviously going to have digital at their center, and what they'll need is more data capacity, they'll need more cloud capacity, and they'll want to embrace AI. And so I think when you look at a market like India and you take the population and where it is in terms of its growth curve and its urbanization, you can see that data centers here will be a long-term and very significant opportunity. So you're right, it is relatively nascent compared to other markets in the world, but like we've seen in other sectors in India, it's picking up quickly. And just as this economy will soon be the third largest economy in the world, it will clearly be a big consumer of data and will need a lot more data center capacity than it has today.
Ben, are you sort of public market investors or primarily private market investors?
So we have three real areas we focus on across the $650 billion of assets we manage today on behalf of our clients. About $250 billion of that is in private markets, principally in things like infrastructure and energy transition. The other 400 is split between credit, which is really public, levered and private credit. And then the remainder 200 is in public equities. And our public equities business is principally based in the US and Australia and looks at all different types of listed equities, large cap, small cap, emerging markets, growth, tech, those sorts of things. So we do have a broad array of exposure to the equity markets around the world.
Any asks from the government, since the government, of course, is a very big player with policy decisions, etc., in the infrastructure space?
Yeah, so it's really interesting. One of the things that I spend a lot of my time on is speaking with clients, and I'd say the number one issue around the world with institutional clients in particular has been around geopolitics, and a lot of that is focused on the stability and transparency of government policy and how impactful that can be around the world. And we've seen that in markets like the US, where we've had the IRA, which has been one of the most profound industrial pieces of policy for decades, and how much that's done to stimulate investment in infrastructure and energy transition. And so I think that's a good example of the impact that government can have in terms of helping stimulate and drive investment and create confidence and momentum. And I think the Indian government has done an excellent job, particularly over the current administration's time, in terms of making this market more transparent, making it more liquid. We've got good balance sheets at a government, bank and corporate level. And so I think all we would ask is that the government focus on continuing to make business easier to do. And that means the government obviously has an important role to play and it's a much more difficult thing to be a government than it is to run a business. But making business easier to do, making it more transparent, reducing red tape, being very clear on areas of policy and helping support that investment is, I think, always a way to create confidence and to attract what is a finite amount of global capital.
You're watching us here on Halftime Report. The market's been a little volatile from the time we started the show. The Nifty's come off a bit from the highs itself. So perfect to get you the F&O setup at midday itself. If you look at it, the Nifty holding around the 24,520 mark. When we started the show, it was closer to 24,600 itself. And that's because the Nifty Bank is down about 65 points. The Nifty Midcap Index, however, continues to do well, though that too is off the highs. What's interesting, however, is the midcap IT space, which is a buzz. Of course, Persistent and Coforge buzzing on the back of strong numbers, but there has been a bit of a rub-off on that on names like First Source. We have, Emphasis doing extremely well in trade today, along with Oracle as well. Both of them putting gains in a market which is slightly wobbly in today's trading session so far. For the Nifty, the 100-day moving average, which was a bit of a support earlier, then we went back below that mark today. And thereafter, during the day, we went above the 100-day moving average as well, but struggling to stay above that for a longish period of time. The biggest reason for that is the Nifty Bank. The Nifty Bank has now gone below its important levels as well. For the Nifty itself, 24,500 seems like a bit of a fulcrum, which is why we're seeing action on both the 24,500 call and the 24,500 put. So 24,500 put for a premium of 100 rupees, telling you 24,400 thereabout is the first leg of support. But on the way up, upwards of 24,500, closer to 24,600, there is resistance, and that's visible in the kind of action that we're seeing at the 24,500 call itself. Let's talk about the Nifty Bank now. The 51,462 mark, which is the 100-day moving average, is a level that the Nifty Bank is struggling to cross, and as a result of which there is some pressure on the Nifty as well. The Nifty Bank will be an important index to watch out for, particularly in the second half of trade, because it is Nifty Bank weekly options expiry. The 51,300 call and 51,000 put, both most active, whereas the Nifty Bank at 51,200, telling you there is 200 points on the downside in terms of support, whereas on the way up, there is just 100 points when it comes to the resistance. That's about the Nifty Bank, but keep an eye out on a bunch of these stocks, specifically L&T Finance, Chambal Fertilizers and PNB, because the open interest is now below the market-wide position limits, below 80% mark. So the stocks may actually exit F&O ban today.
Already 350 points off the highs of the day is the Nifty Bank, and shows the struggle on the Nifty as well. Mangalam, thanks a lot for that F&O update. Let's pose that question now to Pritesh Mehta, Senior VP Research at Yes Securities, who is joining us now. Pritesh, good afternoon. Thank you so much for joining in. As the Nifty is firmly maintaining that sell on rallies template, do you believe that the risk reward for further downside now has abated if you want to short at these levels? What's your call on the index?
Good afternoon. So I would have a different approach right now. See, one thing I like to follow very closely is the internal breadth and also the intermarket analysis. So what our studies have shown us that our customized breadth on Nifty 500 is around 10%. It means that around 10% of the stocks of the Nifty 500 universe is showing bullish trend. The number is very low. But the breadth tells us that historically this kind of extreme position does not last for a long time. So we are expecting a reversal and improvement in breadth from here on. So when we talk about Nifty, so our top 10 customer Nifty index is approaching its half-yearly mean. And since March 2023, on 3 occasions we have seen this moving average acting as strong support. So we are expecting some sort of respite coming in as far as Nifty is concerned. So I think we should be looking for buying opportunities in this kind of market and keep the chaos and voice aside.
Since you said look for buying opportunities, what are the stocks that you're recommending, Pritesh, this afternoon?
So HCL is one stock that we like from the IT space. Now see, this stock is outperforming its peers from the large cap universe. Also, is outperforming the IT index. We are talking about a pattern of double top buys, series of double top buys, bullish at a breakout. So target is around 2,100 and stop loss will be around 1,770. Second stock that we like is Bharti Airtel. The stock is attempting a triangle break on pointer figure chart. We are talking about a follow through of bullish anchor column. So target would be around 1,900 and stop loss would be around 1,620.
All right, Pritesh, thanks a lot for that. Meanwhile, there are numbers coming in from Godrej Properties at the bottom of your screen. Of course, for real estate companies, quarterly numbers do not matter as much because the nature of reportage, you have advanced launches and collections, etc., would be a lot more important than just the reported numbers. But be that as it may, the net profit has seen a massive jump because of the element of a tax write-back. There has been a tax write-back of close to 169 crores as well. Stock holding mildly in the green itself. As we slip into a short break, let's get you a small programming note. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18's Market Masters, Market Movers Forum tomorrow, 3 p.m. onwards, featuring guests like Ramdev Agarwal, LBS Naren, Nilesh Shah and others to help your portfolio prosper this Diwali.
Back with us here on Halftime Report. A couple of stocks, some numbers flashing on your screen. KPIT Tech, the margins have seen some bit of narrowing on a sequential basis, around about 70 basis points. The net profit remains unchanged at 204 crore rupees. The board has also approved a fundraise of around 2,800 crores through the issue of equity shares as well as KPIT Tech. So revenue has gone up 8% to 1,471 crores. The stock off the highs of the day. Godrej Properties' numbers just came about. We're waiting for the investor presentation to come in for the guidance, whether the company has managed to hold on to its guidance or not for the full year. But another stock that is buzzing in today's session is Amber Enterprises, and that is also at a record high in today's session after its second quarter results. Upasana is here with more details.
Well, Amber Enterprises reported strong set of numbers. Revenue and PAT above poll estimates, while margin came in line. Revenue saw an uptick of 82% on a one-year basis. EBITDA margin stood at 6.7% with an uptick of 30 basis points, and PAT stood at 19.2 crores versus loss of 6.9 crore. Now, management commentary remains quite upbeat. Management says prolonged summer and low channel inventory led to a robust growth in RACs, and this year marks as the best year for AC industry in last 40 years. AC industry can grow at least 3 to 3.5 times in the next 5 years is what the management has highlighted, and it expects AC industry to grow by 30% in FY25. It also believes that the Amber will outpace the industry growth rate in H2 FY25. And coming to Sidwal, the management has updated that the greenfield expansion is on track and margins will come back. Coming to CAPEX, FY25 CAPEX is planned at 350 to 375 crores. And in terms of revenue guidance for FY25, it remains conservative at 25% and ROCE at 15%. For electronic division, the management has guided a revenue growth of 45% for FY25 and expects margin to range between 7.75 to 8%. The company also plans to invest 650 crores for advanced manufacturing technology for multi-layer PCBs, and company has also gone ahead and commented on JV with Korea Circuit. It believes that this will give company access to mobile, IT module and semiconductor industry as company aims to become a significant PCB player in the near future.
All right, we take that point. That explains the big up move that we're seeing on Amber. But again, we slip into a short break. Get you more programming note as well. Why is that? Because the biggest market experts will be joining us in the CNBC-TV18 studios. This year, we're giving you a chance to meet all your favorite market guests and experts. 5 superfans will get a chance to visit the CNBC-TV18 studios on Thursday to interact with the biggest market experts. Write to us on our social media handles, tagging CNBC-TV18 with the hashtag 25 years of CNBC-TV18 to take your chance. Meet the CNBC-TV18 Market Movers Forum at 3 p.m. this Thursday.
In today's session is Amber Enterprises, and that is also at a record high in today's session after its second quarter results. Upasana is here with more details.
Well, Amber Enterprises reported strong set of numbers. Revenue and PAT above poll estimates, while margin came in line. Revenue saw an uptick of 82% on a one-year basis. EBITDA margin stood at 6.7% with an uptick of 30 basis points, and PAT stood at 19.2 crores versus loss of 6.9 crore. Now, management commentary remains quite upbeat. Management says prolonged summer and low channel inventory led to a robust growth in RACs, and this year marks as the best year for AC industry in last 40 years. AC industry can grow at least 3 to 3.5 times in the next 5 years is what the management has highlighted, and it expects AC industry to grow by 30% in FY25. It also believes that the Amber will outpace the industry growth rate in H2 FY25. And coming to Sidwal, the management has updated that the greenfield expansion is on track and margins will come back. Coming to CAPEX, FY25 CAPEX is planned at 350 to 375 crores. And in terms of revenue guidance for FY25, it remains conservative at 25% and ROCE at 15%. For electronic division, the management has guided a revenue growth of 45% for FY25 and expects margin to range between 7.75 to 8%. The company also plans to invest 650 crores for advanced manufacturing technology for multi-layer PCBs, and company has also gone ahead and commented on JV with Korea Circuit. It believes that this will give company access to mobile, IT module and semiconductor industry as company aims to become a significant PCB player in the near future.
All right, we take that point. That explains the big up move that we're seeing on Amber. But again, we slip into a short break. Get you more.
Welcome back, and some other stocks that are buzzing in today's session. Max Financial is also on a tear after reporting its second quarter results. Yash is joining in with more details. Yash.
Well, Hormaz, a top-down beat is what it was for Max Financial Services in the second quarter. Your total AP, your retail AP, value of new business and even margins came ahead of the number that we were working with. As far as new business premium is concerned, that grew by 25% in the second quarter, bang in line with CNBC-TV18 poll. The total annualized premium equivalent or total AP, that grew by 31% in the second quarter. The number that we were working with was 2,111 crore. What came through was 2,170 crores, so a slight beat there. Retail annualized premium equivalent grew by 34%. The number that we were working with was 21,8 crore rupees. What came through was 2049 crore rupees. Value of new business accordingly also grew by 23%. The number that came through was 512 crore rupees. The number that we were working with was 472 crore rupees. So a big beat as far as the value of new business is concerned. Finally, the margins, they were down 157 basis points. On a year-on-year basis, the number on the margin front was 23.6%. We were working with 22.36%. So beat there as well as far as Max Financial Services is concerned.
All right, Yash, thank you so much for that. That's about Max Financial. Take a short break, come back on the other side. Manisha Gupta joins in and an exciting conversation lined up with Suvankar Sen of Senco. Stay tuned for that.
Welcome back, and let's take a look at the gold and silver prices trading at an all-time highs right now, right here. And when you look at Dhanteras and Diwali as a week, I mean, this is that period when you see very strong demand come in from the general public. You know, it is usually said that during Dhanteras and Diwali, it is 20 to 22 tons of gold that gets sold and around 500 to 800 between that amount, 500 to 800 tons of silver that gets sold as well. So this is an auspicious period, and while this time around you could be looking at that quantum going down, but not the bill price, because the prices have surged quite strongly. When you look at the last 1 year itself, or this year for that matter, gold and silver in that sense have outperformed various other asset classes. We've seen gold prices hit an all-time high with nearly 30% of gains in this year, and the silver prices have gained up by nearly 47%. If you look at last 1 year, last 12 months, that is, then you are looking at 40 to 50% of gains come in for gold and silver, both of these commodities here. Well, to talk further about on what kind of sales are we anticipating and what are the new launches that we're looking at as well, we are joined by Mr. Suvankar Sen from Senco. Suvankar, hi, thank you so much for joining us. What is your sense with the all-time high gold prices? First of all, are you looking at much more gains from here on?
See, so right now, if you see that, I'm sitting in the showroom with Dhanteras around the corner, trying to, interact with the customers and trying to understand what's happening on the ground. So, prices have moved up quite a lot in a very short period of time. Now, in terms of the gains, one has to understand that on what basis are these price rises happening. Yesterday, the BRICS summit was there. There is a lot of uncertainty for the financial markets that how India, China, or Russia would work together and try to come up with a plan for trade, how much importance of the dollar will be reducing. And on the other hand, you see the US elections coming in. There is a lot of uncertainty with who's going to be the leader, the next leader in the US as a country, which is one of the leading countries in the world. And I think in that whole uncertain situation and the war happening, the gold people, the investor community, and the various countries across the world are buying gold and silver as a hedge against the various uncertainties and risks. And now with this, honestly speaking, I remember talking to you, and when gold price was about 72, 73,000, I think it was not even a month ago. And then we were discussing that how much can it go up to? And obviously we were looking at it can go up to 10% from here, right? And in a very short period of time, these 10% movements have become like a piece of cake. It's just moving up and up when it has to. So, so I think, yes, I currently seeing the situation in a very practical and a historical way. There is a possibility of 6-7% up from here for now, but there is also a possibility of 7-8% downward trend if there is some amount of certainty that we get across the world. But in the long run, a little bit of analysis what we can all do with 2025 continuously being a very year of uncertainty, with China becoming growing and Taiwan issues coming up. I wouldn't be surprised if 87, 88,000, like even if you've seen the high, look at silver, we've seen a 1 lakh rupees. Now, when you've seen the high, even if it comes down to 90,000, right? People will all come and buy at 90,000, 92,000 also, correct? So once you've seen the high, any correction, there might be demand coming from various sources. So we don't see a huge downfall, but the upside of 7-8% from here is always a possibility.
Okay. So, Anka, since, this is perhaps the first time I've seen you sitting in one of your showrooms there, is there a favorite jewelry piece that you have? And also, what is your sense then this Dhanteras? Are there any new designs or new launches that you're making at? And what are you anticipating in sense of sales this time around during this Dhanteras Diwali period?
So very honestly, if we look at the consumers that are coming to buy this Dhanteras, there is a large section of wedding consumers, because from November onwards, there is large number of weddings, November, December, up to whole of Jan, Feb. So there are buyers who in the month of August, when the duty got cut, we could actually, we saw a lot of footfalls at the stores in the month of August. And that had been the beginning of the buying of the wedding season. Then September, because of Pitri Paksh, it came down. And now again, this Dhanteras time, I think consumers are also worried. And and you know that what is there in the future? Should I wait? Should I not wait? But I think they have already started buying. We can see at least 40 to 50% of the consumers who are buying right now are related to weddings. And the 40-50% who are not related to weddings, they are divided amongst consumers who with a budget of 2-3 lakh rupees buying some kind of jewelry also as a annual buying during this auspicious time. And there are some consumers who are like, working women jewelry or lightweight for the daughters, something within 50,000 to 1 lakh. That is how I think a kind of buying happening. 20-30,000 rupees is a budget, I think, consumers at the, all levels, some kind of a pendant, ring or earring that everyone would like to buy during this auspicious time. So this is how we are seeing the consumer. You could see that I'm sitting at the diamond counter, and if you look, if the products are well visible behind me, you will see that the trend is that you have to work on the design, put a lot of color stones, right? It's either the rubies or the emeralds, or mix it up with pearls. So that is something that at one end, I think that's happening in a big way. Consumers are looking for a change, looking for something unique, whether it be lightweight jewelry or heavyweight jewelry. So that is one part of it. Like, for example, while there could be a lot of heavy jewelry, but you see here that these are the kind of modern designs, asymmetric shapes.
So, Ankar, how much is that piece for?
this piece will be approximately 3.5 to 4 lakhs, this one. And this is more lighter. It's like a choker. This will be between 1.5 to 2 lakhs. So these are a little, those kind of pieces. Modern design. So it's not just really...
Mangalam, anything that you're looking to buy from here?
No. Suvankar, the only thing I can say is that, you know, as quickly as you showed all those pieces up on the screen, just put them back once again.
Before we start liking them too much.
Yeah, before we'll probably talk about gold and silver for Dhanteras, because that will be more, value as far as investment out there is concerned as well. Thank you so much for joining in, Manisha, for this.
Here is your gold, you know.
All right, there's your gold then.
All right.
It's totally equipped right now.
You know, next time we'll do interviews in your showroom only, because you keep distracting us with these pieces.
But this is beautiful. I have to say that, Mangalam. That's a very, very pretty piece.
So you have a ready buyer for that piece, Suvankar. But at these prices, not touching anything with a barge pole. Thank you so much for joining in. Wish you a very, very happy Dhanteras, happy Diwali as well. Manisha, thank you for taking us through with that conversation. With that, we're out of time on this edition of Halftime Report. Business Lunch will take all the market action ahead.